That's awesome. All right, cool. Yeah, it's awesome to be in Amsterdam for this event. It's a great city. To give you a little bit of background on the firm, we recently rebranded to BX3 Capital. We bought a broker-dealer to be compliant with all the securities laws in the US, so we can do OTC trades and capital raises. But I got my start in crypto about 2 years ago, helping to set up offshore and onshore funds in the US and abroad to help people pay lower taxes on their gains, as well as to avoid some of the stringent regulations in the United States. So today I'm going to talk a little bit about crypto mining and the taxation benefits on that, available both in the US and abroad, as well as ICOs and how they spend money once they get them in, how they should be spending money. So the first thing, does anybody know how much an ICO costs on average? Or does anybody here done an ICO now? Yeah,
Yes, I've done an ICO, so I know exactly how much they cost for at least me. So
yeah, what was the ballpark number?
I'd rather not disclose.
Okay.
But yeah, I think it can vary from absolutely peanuts to potentially millions depending on the project. So I don't know if you can generalize, but yes, they're not cheap if you do it right.
Yeah, that was the point. They're not cheap. There's a lot that goes into it. Yeah, so one of the first things people should do is when you're starting an ICO, create a budget. I mean, every investor wants to see dollar for dollar what you're spending for. We get people all the time coming in and are like, hey, I want to make 50 million, 100 million, and they have no idea what you're using it for. And usually you can't spend anywhere near that amount of money. So that's the first step. And another thing to do when you take in your tokens, sell them. I mean, whether you're taking in Ethereum or Bitcoin, everybody's fallen now that decided to hold on to it when they got them at 1,200, and now it's at 200, and they're like, we don't know what to do. We took in $100 million, and now that $100 million is worth $10 million, and we can't pay our bills. We can't ask for any more money. So I don't know if anybody else has been through that experience before, but there's a lot of people that have their problem, and not only that, they tend to have the problem too because they come in and they just start hiring away. They hire the most expensive developers. They don't care because they have a ton of cash, a ton of free capital. They don't act like when they were bootstrapping before and they were trying to build at a low cost. They were trying to do whatever they could to get by. Now they have just tons of money and they just want to spend it and they just blow through it. Most of them don't have a budget. They don't have a financial or revenue projections before they do their offering whatsoever. And if you're going to do a utility token raise, at least in the US, it's taxable. Everything you raise in year one, if you don't spend it, is taxable. Most other full tax jurisdictions, most of the jurisdictions in Europe are the same way. So if you can't spend the money in a year, don't raise it. If you're going to do a security token, it goes on the balance sheet differently. It's not taxable. But if you're going to raise that type of money, just raise exactly what you want to have and have a financial plan in place. Anybody else who's done an ICO, do you guys have a revenue projections and financial plan in place before?
Are you talking to me?
Anybody who's done an ICO.
Oh.
Did you guys have one?
Yeah, we absolutely did.
Yeah. So that's the first thing.
One question here, you didn't mention what was the average price of a token? Correct me if I'm wrong, I've heard that's like around $500,000.
I was just trying to make a ballpark point that it's expensive, but it can really range from, if you already have an MVP built out and you need to set up a new entity, pay some legal fees, could be around 100,000, a white paper. I mean, you could do it for 250,000, depending if you find people who want to work for tokens or not, all the way up to millions of dollars if you're trying to, if you're trying to build a product that require in the United States, that like such as a wallet, to be compliant, you need money transmission licenses in all 50 states. It costs $8 million to be compliant in all 50 states, plus a bit license, which is going to cost you about another $500,000. So for people who bring in their money and they're like, yeah, we want to do this, it's really not realistic in the United States unless you to be fully compliant, unless you have a ton of capital. So that's one of the things. It's just expensive, but don't budget more than you need. And then from the institutions that we talk to about spending the money, that's one of their biggest things is these companies typically do it in funding rounds. You go to traditional venture capital, you raise your seed, your Series A, Series B, Series C, Series D. Here, everybody's taking the money all at once. Not many companies have done multiple ICOs. Somebody raises $100 million in one shot, and they can't spend it. So that's one of the things that kind of freaks them out. Is that we're giving all this money to them, we have no idea where it's going. And there's no reporting requirements either. Switzerland requires audits, but most jurisdictions don't even require reporting audits. So you have no idea. Has anybody invested in an ICO and they just lost their money and they have no idea what happened to it?
Yeah.
A flat out scam or just the value going way down? Yeah. So yeah, and then from a tax perspective and from an issuance perspective, don't issue a utility if you don't have an underlying business. We get it all the time in the U.S. from a tax perspective, from how you spend your money. If you don't already have a business that you're integrating the token to, it's not really a utility and you can't really do it. And it's the same thing. Every bank we talk to is looking for security tokens because they just don't get the concept of something that doesn't have a working MVP that they're buying that they can't use. They consider it worthless. So, from this perspective of where the money's going, they're a little bit terrified with where the dollars are actually headed to when you don't have any idea of knowing. Has anybody here bought into a security token project yet? Yes? No?
Depending on how the SEC would classify some of them afterwards. Because they know at the moment, but we still don't know how the classification is going to be.
Does anybody here have unease over a project they invest in it becoming considered a security?
Which project?
Any project you bought into, you're worried that the SEC is going to turn around and say it's security.
I don't give a shit about the SEC.
Okay. No, that's a good answer. It's a good answer. If you're all offshore, it doesn't matter.
Anybody here does? And gives a shit?
If you're a global platform, this is also based in the US.
Obviously.
And so on, the whole thing
Yeah.
can make a lapse. So we have to be compliant because subpoenas can be national.
Yeah. Well, as soon as you enter the U.S. market, an investor, all it takes is one person, and it's an issue. So that's really the bottom line when it comes to ICOs. Have a plan in place, raise exactly what you're going to spend. Don't spend $1 more than that. That's.
Can I just say something? If you're doing a security token, don't sell it to US people.
Why is that?
Like all the red tape and troubles just go away, like potential lawsuits or just anything and everything. Just go away. You just don't sell security tokens.
So,
Or that too.
would you want to cut off the entire U.S. market?
I say let them figure it out on their own, because any savvy investor that knows that they can't buy a security token and there's an opportunity, they will find a way, whether it's legal or not, to obtain it.
Yeah, there's a ton of U.S. investors who have done that to get out of the lockup requirements, who have created offshore entities to get in and out of positions. But the registration for a Reg D, if you're going to raise from all accredited investors in the U.S., is actually a pretty simple process. When you want to do a crowd sale under Reg CF, you can only do $1 million. And an A+ takes about 9 months to get registered, to set up, to sell, and you can raise up to 75. So yeah, unless you want to raise from people who are worth more than $1 million or have over $250,000 a year in income, it's tough to do in the U.S.
I mean, racing's not that's the easy part. The regulations and cutting through all that. That's filling out the paper. That's easy. But as soon as your token starts tanking or whatever, then because Americans are quite lawyers and suing savvy. You'll have a constitutional lawsuit before you.
Sure. Yeah, there's about 100 class action lawsuits going around in the U.S. right now over security and utility tokens, and the way a lot of money is spent. Somebody else has a question right there. Yeah. You.
Don't you think that's a major disadvantage for American entrepreneurship?
Yeah, I do. And the U.S. has been a really slow mover. They've issued a couple subpoenas, but they've said absolutely nothing about a regulatory framework. And as people have seen the drop in Bitcoin and Ethereum, they keep delaying the CTF, and they pretty much have the power to do so forever. So from every discussion we've had, they don't understand it. There's nobody there that has a clue. I mean, when the chairman of the SEC says every ICO he's looked at is a security, how many do you think he looked at? 1, 2? Do you think he sat there and read 100 white papers? It's like, oh, So, I mean, they really just don't care. I mean, that's the reality. The U.S. equity market's a couple $1 trillion. The crypto market in the U.S. is probably $50 billion. It's just so irrelevant to them. It's just not worth their time.
Well, I will say that there is a coin out there that's actually working alongside the SEC to try and actually get more regulated and really push that market. And they're essentially trying to push themselves to maybe create a better standard. And so there are companies out there that are at least trying to push and help like guide the direction of
So
how the US sees that.
anybody who's issuing can go to the SEC and request what's called safe harbor, which basically means the SEC or the regulatory IRS, whoever, won't prosecute them and won't go after them, but they're engaged throughout the whole process. So it's longer and it takes time because the government in the US moves slower than anything else, anywhere else in the world. But you don't have to worry about that time later. So yeah, that's one thing that more and more companies have been trying to do. But like I said, you have to have a lot of lead time.
Yeah, but you guys are missing also the sandboxes concept that we have here. Well, here the UK global initiatives are being developed. Plus, on the other hand, like you have decentralization of the regulatory framework, which is between the states and how the different, first of all, the different states, then the different institutions themselves, not agreeing on the state or government or federal level. So there's a lot more layers to the onion, right?
Our states are a lot more active in enforcing than anywhere else in the world. Every state has their own securities registration and securities laws. So like if you saw what happened at Ship Chain, they got an subpoena from South Carolina, and the SEC didn't have a word to say about it. Same thing with what happened to a couple of different lending programs down in Texas. So I mean, one state can go after you and the rest can't. So people are starting to exclude certain states, like New York, you need a BIT license now to operate. And they're trying to make it so you have to have a BIT license to issue, and there's only been 5 ever. So that cuts a lot of the banks out of it because, you know, they're not going to get them. They don't care.
Shouldn't they care though? It's a bit like they're blockbusters looking at their DVDs and they're like, Netflix is never going to take on.
Yeah, not to get too off track, but that's one of the interesting things that people talk about is everybody wants it to be decentralized. And you know, power to people, and instead of one dude giving $40 million, every dude, you know, and get a million people giving $40 each. Now everybody wants to go to the big banks and the big VC funds. And if you look at the holdings, somebody just published it, like Blockchain Capital and the top 10 crypto firms hold more assets than the rest of the world, you know, the rest of the world combined. So the market's getting more and more centralized, which is kind of interesting for something you want to be decentralized and open source. Yeah, so that's one of the weird things with them coming in. It's really because of the regulations in the US. I mean, you can't raise from your every average person in the US. And I've been at events and I gotta get up and he's like, look, I work hard for my money. I want to spend it on whatever I want. I shouldn't have to be regulated. I should be able to put it in any ICO I want. And they're just like, yeah, I mean, that's the way the law goes. There's a lot of fraud, a lot of scams, and you know, penny stocks. We've had a lot of problems in the US with that. I know other markets in the world are better, but yeah, we've had a ton of problems. So, yeah. Good? Yeah, so that's what I was saying about why people should care about where their money's going and why people should care about the raise. That's basically the first part. The next part I'm talking about is crypto mining benefits. Is anybody in here a miner? Or mine at all? Okay, awesome. Where do you have your rigs? Do you have them in the Netherlands or not?
In Mongolia,
Mongolia? How much do you pay per kilowatt?
6 cents.
Okay, and how many rigs do you have?
About 1,100.
Yeah. So in the United States and most of the jurisdictions globally, there's what's called a qualified data center. So if you have a certain amount of hash power, you can be considered a qualified data center. And pretty much every country in the world wants the data capacity and the mining capacity in their country because of the data. It's considered data storage. So you can get not only property tax abatements, but there's special opportunity zones where they'll actually give you the land to mine on. Yeah, so I mean, when people are thinking about site selection, that's one thing we help a bunch of big mining companies with, both in the US and abroad, is when they want to set up the rigs, where do they go? And they're looking to this because, you know, they're getting free land and they're not paying any taxes on it, and they're getting a reduced energy cost. So for anybody who's mining, I mean, the benefits can be super, super significant of looking at just different jurisdictions based on what the government's given out and making available. Especially if you're going to use renewable energy to mine, then your cost is almost zero. I mean, you're only really paying for the hardware and the installation, and it's going to be down to basically nothing. So yeah, that's one of the things. Does anybody have any mining related questions?
Well, how's the regulative framework now that you said basically about
For mining?
renewable energy? You do have the state of Nevada and others, which are, well, there are 50-something states, but you actually do have a regulatory barriers there as well. For you say only the hardware load. however, is made to be quite expensive.
Yep.
So
Yeah, that's the only thing the states aren't paying for, but they'll give you land and they'll give you a reduced energy cost. I've seen it as low as 3 cents a kilowatt that people are paying in the United States. Out in Washington, I'm sure you've read about the town where the Fury has a bunch of rigs. They're paying like 3 and 4 cents a kilowatt out there. It's pretty crazy. So you talk about how much data you're storing, and it gets you an exemption as a qualified data center. So it's one thing that a lot of people don't think about, and we started doing it in the U.S. and we started doing it more and more in emerging markets and in other markets too, and going through the local rules and laws and trying to figure out where else is it available. And it's available in almost every jurisdiction. And then the renewable energy becomes a huge impact because of the Paris Climate Accord. So there's a lot of provisions in there giving people money for doing things with renewable energy. So if you're smart with it, you can get your costs almost down to zero.
Have you heard anything related to the cost efficiency for just proof of stake systems? Is there any savings with that you might have heard?
No.
So they're just focusing purely on using your machine computing power?
Yeah, exactly.
Here's a question in the
Yep.
Do you need to be a U.S. citizen to open your own mining center in the U.S.?
You don't. No. No, and it actually helps. I mean, if you're trying to get U.S. citizenship, you probably wouldn't want it from a tax perspective because if you're a U.S. citizen, you've earned money abroad, you have to pay tax on it, even if you don't live there. But if you're trying to get citizenship, owning a business there can help a lot. I mean, we have visa programs where you can basically invest a certain amount of money and you end up with citizenship.
Which countries do you advise actually, your clients?
Which countries what?
Which countries do you advise to mine?
We have we have clients mining in Mexico, Brazil, Canada, United States, and a couple of the Eastern European countries, as well as Australia.
Okay.
Yeah, so if there's a specific country you're interested in, we're happy to talk about it.
Lowering the mining cost, how would that impact the overall price of cryptocurrency? Wouldn't the stock price also slowly lower?
Because there would be more, because the supply would be easier to generate, or because it would?
Yes, I can imagine people are mining it cheaper and cheaper. Like there was the $500 in Venezuela to mine 1 Bitcoin. Like people there were, I think they're willing to sell for 2,000 if they could. I don't know. Will it lower the price?
If people are willing to sell it, I mean a lower margin. But I mean right now, up to about $1 million, you can go on a liquid exchange and get a deal pretty close to the spot rate for Bitcoin. So until that starts happening, until people start wanting to buy or sell their Bitcoin, I don't really see that ever happening. I mean, we got a report today. We do work with Fundstrat and all the research, and they gave an absolute bottom on Bitcoin of 3,300. So that was like it can't go any lower than that, just based on mining costs. And Tom Lee's a big mining cost guy, and that's how he kind of calculates his price.
That's the average money, the lowest.
He said that's the lowest it could go from his perspective. Yep.
Do you have miners? Are you mining yourself?
I'm not mining myself. No.
Why not?
It's just really not a good investment. I live in New York and I haven't set up rigs. I also don't understand the technology well enough to be an efficient miner.
Also add on to the idea that well, if it's cheaper to mine, then wouldn't the price go lower? There's also the fact that the supply of Bitcoin, or how many Bitcoins you mine per block, is just decreases. So there's a kind of balancing act that should be in place. Yeah.
I just want to say, if anyone's looking to get into mining and wanting to buy technology like in the next few months, try to hold off until the newer chips, the 7nm chips, are out early next year, because that's going to use a lot less power and have a lot higher hash rate. So you're going to get a lot bigger bang for the buck. And also, if you're looking to get into mining, there's these new companies coming out that are submerging them in liquid. So if you're able to buy a liquid cooled machine, those would be a better investment, as you'll have 50-60% savings in power. So that'll essentially where you'll make up your bigger amount of money, even though the difficulty in the hash rate gets more difficult every 2 weeks.
Yeah. Awesome. Okay, cool. Yeah, that was pretty much it on the slide. Does anybody have additional questions about the regulation or the climate stuff? I haven't looked at the time. I'm not sure how much we went through. Yeah, we're still pretty good. Does anybody else have questions about the regulation?
How do you see the futures conversation going on in the US? I think it's something that is kind of a put that is right now in the debate of if they're going to get approved or not. How do you see that conversation?
Of the ETF?
Yeah.
I think that it's going to get delayed until the last possible state. They've been really picking on the custody, and if they can, really keep the stuff safe, because the last thing they want is to put it on the public market, and then the underlying assets not be there.
So that would be March 2019 or?
VanEck has some different custody solutions, and they're pretty close to the SEC because they do a lot together. So I think you might see it at the end of September, but I think either way you're going to probably see one this year. They're going to have to. A couple influential investment firms in New York wrote letters to the SEC were like, hey, look, you're going to collapse the market. You're basically holding them hostage here, but not giving people access to products. And we've talked to a number of firms, big firms in New York, and their investors, especially the high net worth, they want some sort of exposure to cryptocurrency. Maybe 1% of net worth, a half of 1%, but they don't want to sit on the sidelines, and they don't want to go buy it on the exchange themselves. They want it to be in their traditional market where they can understand it.
Who went this first? There was a question first. You come to this next.
So I had a question about, can you give an example of some regulations that you think would benefit the cryptocurrency market at the moment?
Yeah, sure. So I think that a universal accepted, first of all, a governing body across all countries. So there's universal regulations. It's tough to have something that's a global asset and works globally, where every country has different regulations. It's just a nightmare for people trying to set up and launch ICOs. So there's no clear international framework. So I think as soon as somebody would put something together on that, whichever way you want to go, whether you want to say everything's a security or nothing's a security, I think it's imperative that there's some sort of global framework in place.
What do you think about the global digital finance?
What I think about?
Global digital finance membership that 11FS and with some partners are trying to build as a framework.
Yeah, I think it's a great start. I just don't see people recognizing it yet, and until it's universally recognized. Even if the world, usually with securities regulations or any regulations, the U.S. takes the lead, and then after that, everybody else follows suit. If the world were to take the lead on this, and there was a global regulation everywhere but the U.S., they would eventually follow suit because they don't want the intellectual property, they don't want the engineers, and they don't want the coders all living in the United States. They want that capacity there, they want the technology there for the future, and that goes for all the tech products, especially with the protectionist policies we have right now.
What do you think of fees of application for licenses for businesses? Do you think they can function as an entry barrier to avoid scams, or do you think it's
Yeah, certainly. Just if you're going to do a Reg D filing in the United States and Social Security, it would cost you about $25,000 just in the filing fees. So, even if you had people to raise the money from, you have to be able to put up money before you can raise it. And like I said, to set up a wallet, it's $8 million in money transfer.
But do you think that's a benefit for the economy, or?
No, I think it's a detriment. I think it's a huge barrier to entry, and it makes it tough for a lot of firms to get in and compete. If you wanted to build an exchange in the US like Coinbase, you'd probably need to have somewhere between $10 to $25 million in capital backing just to get a start on it.
There was a question.
I had two questions. One of them was for the land the government gives away because you're a registered data center. Surely there must be some catch because there needs to be some sort of give and take for this. They can't just give you the property for nothing. So what are the strings attached to that?
So there's a certain amount of time that you have to be there to operate as a qualified data center.
But what do they gain? Because they're getting you something tangible. Which is,
having data storage within the US.
But what do they gain from that?
So they've talked about this a couple of different times in super non-public capacity, and they're worried about Bitcoin becoming a world currency. And if there's more hash power somewhere else than the United States, if some country were to acquire 50% of the hash power, then they would be able to hypothetically take over the network and crash the global financial system.
Right. And my second question relates to taxes, actually.
Are there what?
Taxes.
Yeah, so there's a property tax exemption. So you don't pay any property taxes in the land. Typically, property taxes on land can be anywhere from 3 to 5% of the purchase price per year.
The question was in regards to the taxation on the cryptocurrency itself. So we've seen the model of Australia, for example, where people who are making trades, they're taxed on trade, buyer and seller. And also for people who are earning income through mining or through proof of stake rewards, they're also being taxed on that. Do you see that becoming a trend for people all around the world?
Yeah, I do. I think governments are going to find a way to tax it because they don't want to miss out. I mean, if you believe, like I believe, that a digital currency, it might not be Bitcoin, might not be Ethereum, might not be anything that's even been created yet, is going to become the currency of the internet and the currency of the world. Governments are certainly going to have to figure out a way to tax it. They're not going to be able to be around. I mean, if they can't collect taxes, they can't function.
Are there any more questions?
You mentioned custody. Being situated in Europe, which are there's a lot of intent from the big incumbents, which are the normal custody services, so the New York Bank and Mellon, so we have the State Streets and so on. With whom have you guys talked that are able to actually provide institutional custody services? Because this is one of the
So there's no institutions actually providing custody services, and there's quite a raging debate right now going on over what custody actually is. Is it cold storage? Is it hot wallet? There's a company called Minton that's been working on trying how to perfect that. There's a company called Monarch that's trying to become a custody provider. They actually just signed an agreement to become the custody provider for BCT Terminal, and as well as Listia. So I mean, there's some companies trying to do it, but there's a debate over it. I mean, people think that cold storage can be a cold storage could be a form of custody, and I mean, that's from Monarch thinks cold storage is a form of custody, and I know the guys at Minton, and they're like, look, if you can throw it in a fireplace or you can throw it in a dumpster, it's not custody. So yeah, I mean, that's a real problem. That's the biggest thing holding up the ETF is custody.
And what's the closest solution you find to this issue?
The closest solution?
Yeah, I mean, so far, I mean, I've known that Coinbase recently presented its custody service.
Coinbase was able to get SIPC insurance. So in the United States, securities are insured up to $250,000 per person. So they were actually able to receive that on Bitcoin. So any money you have in Coinbase now is insured by them, which is a significant step. But yeah, I mean, Coinbase is, I mean, people still get hacked in Coinbase all the time. I mean, if you saw the news yesterday, Michael Turpin's cell phone got hacked for $24 million in Bitcoin. And he's suing AT&T for $224. So, I mean, how safe is it really? You know, if I had $25 million on my phone and I lose it, and they give me $250 back, that's not a really great deal. I'm gonna be pretty upset.
But is Coinbase insuring your Bitcoins?
Yep.
Or like the
They're insured up to $250,000 worth of your assets.
Okay, because I thought it was just, I mean, so it started with just your fiat value?
It started with just the fiat. So now they're insuring up to $250,000 to keep in your wallet. And there's, I mean, it's really, really, really been tough. I mean, a typical fund's custody fees are going to be somewhere around 1.5% to 2%. People who are trying to charge custody fees for crypto funds are doing around 4 and 5%. So you're thinking about that. I mean, if you invest in a fund, you're losing 5 basis points already just paying for the custody fees because it's so risky and they're taking so much risk. Right? Because they have to insure it. I mean, if somebody's going to be your custody provider, they're taking the risk for insurance. So if they lose the money, you're going to come and sue them, or they're going to have to get insurance on it. Yeah, it's a big problem.
What's actually the future of these bid licenses? I mean, New York State has the bid license.
Yeah.
Are the states following the example? Or?
No, nobody's following New York's example. New York's probably the most heavily regulated, and New York gets a ton of lobbying from banks who are a little bit fearful of it. I mean, I know it's not taken very seriously, but Bank of America and JP Morgan both listed cryptocurrency as a material risk to their business in their 10Ks. So, I mean, you know, there is a little bit there, and then, you know, the financial services regulators are very close with the banks. So anything they can do to kind of keep business steered to the banks and keep their campaign donations coming in, they'll do. And that's what a lot of people think of the bit license. It really doesn't do anything. I mean, crypto's not any safer in New York than it is in any other state because they have the license. It's just a huge barrier to entry. I've personally filled out 2 applications. One was successful, one was not. And it's about 400 or 500 page application, and it's like a 6-month process. So, you know, it's a big timeline if you're trying to operate there. New York's a huge capital market, so to exclude it as a market, you have to, not good.